How about you, Paweł? Are you going to consensus?
Yeah, I'm flying this Saturday, and I completely agree that we need to focus on work and to prepare for mainnet. We are doing the same thing. The whole team is working very hard for the listing and releasing the product, the on-chain product that we are about to release most probably within the next few weeks. But also in the family offices, etc. Because after all, the product of ours is based on TVL, and the business of ours is based on TVL. So we need to start having meetings with the liquidity providers that can support us by providing liquidity. After all, so that's the most.
Absolutely. I think we quite good turnout already. I'm sure a lot of people will still continue to join in. But to start off, obviously welcome everyone to our session on RWA tokenization. We're going to discuss a few different questions and topics in this session. We've got Blocksquare and Nomad Fulcrum here with us, and obviously Abhishek from HAVEN1 as well. Leaders in the space in our RWA and investments in tokenized real world assets. Really interesting to hear from you, Pavel, and from you, Dennis, around what you guys are doing at the moment. Also, give a bit of an intro to the audience, as they probably have not heard much about you guys before. Would love to hear maybe from you, Paul, first, kind of an intro to Nomad Fulcrum, and then from you, Dennis, to Blocksquare. And then we'll hit this. We'll hit the ground running with some questions and some different topics around RWA. So, Pavel, how about you go first?
Sure. So what we are running in here is a DeFi AI protocol that is running on over 100 different AI agents that do RWA transactions on commodities, treasuries, currencies, indexes. So we have access to interbank market where our AI agents are executing these transactions, generating profit. The main reason why we are doing so is that we've seen a big gap and big problem in the blockchain space where majority of DeFi protocols are not sustainable and do not provide sustainable yield because the yield is dependent on the liquidity in the space. So the liquidity is low during the bear market, for example, and Aave Compound, who has 32 billion TVL together, they were generating like few percent, which is not beating the benchmark. And there's a beautiful gap in that space where we can fit in the hedging product that is based on traditional market, on full regulation, but at the end operates in the crypto space, providing stable yield throughout the whole period of time. So we can say that there is no bear market with Nomad Fulcrum. So that's what we do.
Amazing, and I'm sure we'll hear a little bit more about that once we dive into the questions. How about you, Dennis? Tell us a little bit about Blocksquare.
Hi everyone, pleasure to be here. I'm Denis. I'm the CEO and co-founder of Blocksquare. Blocksquare is basically a project that has quite a big mission. We're here to bring the asset class of real estate on chain. We started back in 2017, officially in 2018. And today we've brought so far around 140 million worth of real estate assets on chain, coming from 20 jurisdictions. Actually, I think it's more than that. And we approach this market by providing tools as an infrastructure provider. So basically, any real estate company or startup or financial institution can ultimately marketplaces where they can bring tokenized real estate to their audiences. So happy to be here and discuss the future of real estate on chain.
Very nice. Thanks for that intro, Dennis. And obviously, everyone knows you, Abhishek. You're a special guest on all of the AMAs we have. But for anyone who doesn't know you, haven't heard you speak before, you want to say a quick hello and kind of introduce our work together with Nomad, Fulcrum, and Blocksquare?
Yeah, happy to. I'm Abhishek, otherwise also called Abhi. I lead product at HAVEN1, so I imagine we have community today joining also from Blocksquare and from Nomad Fulcrum as well. Um, so HAVEN1 is building a layer one blockchain, much like Ethereum and Solana and any of these other sort of numerous chain. The unique thing about HAVEN1 is that HAVEN1 is purpose built for use cases which require more user security and user safety. And we call ourselves the wreck resistance chain. So HAVEN1 does that in many unique ways. One, we enable it's a permission network, so both builders and users have to go through ID verification before they can transact on the network. Builders need to go through mandatory audits as well. So rest assured, if you're transacting on HAVEN1, you are not going to be getting scammed or rugged or hacked. And there's many of those in our space. So that's the unique proposition of HAVEN1. The RW angle specifically for HAVEN1 is that um, we think capturing ID verification, both from builders and from users, and working quite closely with institutions, it's a natural fit for the use cases that HAVEN1 is building. So imagine a builder wanting to offer tokenized securities on Ethereum as an example. Depending upon the jurisdiction they want to offer, they will have to go through a fairly expensive user onboarding process. KYC ends up getting shared by the project. What HAVEN1 enables is that we enable, we take that cost at the network level. And because a lot of such projects and products would be building on HAVEN1, these costs ends up getting spread over all these amazing products, and it's not as massive. So builders really like a Blocksquare or really other such amazing protocols. It's a single, one line of code to verify the user identity, to make sure that user is verified or user is from X and Y country, and the user is all these use cases that make it very easy for RWA builders to build on HAVEN1, and that's what we're working with on Blocksquare. And then Nomad Fulcrum and Pavel's obviously been a big supporter of ours from the very beginning. Um, and Pavel did mention he's obviously working on securing liquidity for all the amazing products he's building through Bull and Bear. And we think all of these products can be offered on HAVEN1, among other chains. So to make sure we have the right proposition of the chain, so that builders such as Pavel himself are incentivized to build on HAVEN1 and to offer these vaults to our community and our investors. So that's our relationship with Nomad Fulcrum and Pavel.
Amazing. Thanks for that, Abhishek. Well, let's dive right into the main kind of topic of the discussion of the evening or the morning for some, which is RWAs. There might be people on the call who are not too familiar with the RWA space, and obviously having you guys here as experts is amazing. So everyone gets a little bit of a boosting in their education around RWAs, as it has been a very, very popular topic over the last couple of months. And let's start from the basics, just have a discussion around RWAs in general, and then we'll dive a little bit more into some of the more technical aspects of it as well. But first of all, I would love to open the floor up to anyone who wants to give us a little bit of an intro to tokenization, and how real estate commodities more accessible to everybody. And then we'll dive into some of the challenges that you guys are seeing for the adoption in the space. Um, so who wants to take the floor first? I think Pavel, I saw you. I saw you on
Yeah,
mute
yeah,
there.
yeah. Can you repeat the question, because the last
Absolutely.
sentence I missed
Let,
already.
let's start with this one. How does tokenization make illiquid assets such as real estate, commodities, private
Okay.
equity more
My
accessible to
favorite
everyone?
topic.
Yeah,
My
let's do it.
favorite topic. So the first thing, like I will use few examples to speak about how RWS and tokenization in general is solving the problems traditional market has, because like both markets has some issues, right? We have issues with liquidity in crypto, and all the liquidity is on the capital markets. But from the other angle, crypto is solving a major amount of problems that you have today on the TradFi market. So on TradFi market today, let's imagine that you want to buy Berkshire Hathaway Series A stock. This is Warren Buffett main fund. The one stock costs 700, right now, most probably $800,000. So there is zero liquidity. No one can afford that. Any retail customer is not able to buy that, because it's in the price of one share is the cost of like two houses, most probably. So with tokenization, what you gain is fractionalization. So we can cut into the pieces such a share, and then let's imagine every piece is going to be 1,000 worth. Then every retail customer can have exposure onto profitability on the Berkshire Hathaway and Warren Buffett fund and profitability from there, because they can be fractional owners of that share. Second thing that is being brought to the light is tradability 24/7. Today, we are using in crypto, and it's native for us, the mechanism that is allowing us to trade 24/7. On traditional market, you can trade from 9 to 5, from Monday to Friday. Why? Do they shut down the internet after that or what, right? So that's the problem, because the old legacy systems on TradFi market has been recreation of the process how it looked like before the internet and the electronic system. So the old traders were going to the stock exchange, and they were shouting to each other with those papers in hands from 9 to 5, because after 5 they were going home because that was like off, yeah, and they were after work. So they recreated the same processes, and right now it doesn't have to be like that, but it's still, because those systems have been built like years ago, etc. And crypto is providing tradability 24/7 that can save us from major amount of problems. So imagine on Friday you buy and provide, you open the position, the short position on the oil market, because you think the oil market will go down, and on the weekend OPEC cartel is saying that they will cut the oil production by 25%. So you are done. You have very bad Saturday and very bad weekend. And on Monday, you know that you're already in a loss, but you don't know yet how much, because the market will open with so big gap that you can put a full track factory into that gap. If you would have tradability to 24/7, so blockchain would be an infrastructure solution that would allow you to trade 24/7, you could react, you could do the damage control, because in the moment when the prices would fall down, you can exit and get out from the position. Right now, it's completely not possible. But who can do this? Big financial players. So only big banks have access to the liquidity over the weekend, and they can liquidate such a position, but the retail customers can't. So it's the market is like totally not even. Like there are good and better ones, right? So that's another element that blockchain is providing. And the third thing is accessibility. Today, I'm in Europe right now, in Warsaw, in Poland, in our office of Nomad. And if I want to buy Tesla stock, I'm not able to buy Tesla stock. I'm usually buying ADRs, which are some kind of like financial instruments to buy a Tesla stocks, because Tesla stocks I can buy only if I have a brokerage account in US. Today, I cannot buy it directly. But if that would be on the blockchain, I could buy that Tesla stock directly and have an ownership over that on my wallet or on my custodian account, whatever, but directly. I don't need to create any artificial instrument that is going to be created by the broker, and the broker then will have the brokerage account in US, and will actually physically buy the stock after I will buy on the brokerage platform. So that's another element that is showing how complex and how many intermediates today we have on the capital markets, on the traditional market, that are adding the fees and that are adding to the overall volume, additional delays, etc., which after all is increasing the cost of using such an infrastructure. With blockchain, we have tradability 24/7. Blockchain is one universal underlying layer to exchange any kind of digital assets. You don't need intermediates, you have atomic swaps, and that's the most important thing. And the fourth, one of the favorite examples that came out when we were like 5 a.m. In CMO of Binance house during the Halloween party. And then we had a conversation with this old oil market dude that is working in the oil market for the last 40 years about the crypto market. And the interesting thing that came out from that conversation was that today everyone is saying that crypto is a currency. In my opinion, it's a commodity, right? It's an asset. And the reason why everyone is calling it currency, because the access to that and liquidity is 24/7. So I can go to the shop and I can go and buy bread using Bitcoin, Ethereum, whatever. But I cannot do the same thing with Tesla. Why? Because once again, Tesla is market is open from Monday to Friday, from 9 to 5. And if we would have, imagine what would happen if we would have liquidity 24/7 on Tesla stock, capital markets, currencies, indexes, anything, any financial asset. I can go and buy bread with a fraction of my Tesla stock and pay using that because it has value, and I can just do this because a blockchain allows me to do so. So that's another thing showing that if we will enable tokenization, the amount of transactions using different assets to exchange different goods or services using these assets or fraction of this asset will grow enormously. And yeah, period.
Yeah, and I think you touched on quite a few different topics there, and also the challenges when it comes to solving kind of the accessibility in traditional finance as well. But we've got an expert here whose core business is in real estate. So I'd love to hear from you, Dennis, as well. Why real estate is the ideal candidate for tokenization? How you guys have been able to um, build a business around that right now?
Yeah, well, real estate is a bit specific. Here, Paweł was talking about capital markets, where kind of, a big asset like Apple has been fractionalized already, through stock. And obviously, there's limitations of how this kind of legacy system have been built and are being used. But with real estate, that's not the case. The fractionalization of real estate kind of happens with real estate investment trusts, which are kind of these big funds that hold billions of real estate, but they have a lot of inefficiencies of how they are being managed. And so kind of they really serve the institutional layer of investors like pension funds, etc. But they're not really good investments, I would say, for the average Joe. When it comes to real estate, an average person would think of investing in a primary home as a residence, and then maybe down the line investing in another property. So usually you think about investing in real estate directly, which kind of involves the management of it as well, and then it takes you to that line of thinking is like, I'm going to invest in the market where I live, right? Or that I know. And that means that access to international markets is really limited for most people. And with tokenization, you kind of really bring that to anyone who has access to the internet, because now you can get exposure to any market around the world if real estate assets or investment real estate assets are being tokenized. Now, another way of how you tokenize or not tokenize, fractionalize access to real estate traditionally is through something called syndication. Or basically, you set up an SPV, you get investors to get involved in, each receives a share in that SPV, and they are kind of now co-investing in a specific asset that the SPV will be purchasing. The problem there is that there's no liquidity for such deals. Usually you enter this kind of deal and then you have a time horizon of, I don't know, 10 years. And anything can happen in that time. And on the exit side, will you exit at the best price? It's also the question of negotiating that exit with the other shareholders. So there's a lot of communication and inefficiencies in that process. With tokenization, however, you're basically kind of putting your bet on an asset that is owned by a third party, managed by a third party, but the economic rights that derive from that ownership are then being shifted towards you. And you can imagine any individual being able to kind of have a portfolio with a diversification just as a REIT does. But you can have that same diversification with an investment of $1,000 or $10,000 or $100, which today doesn't buy you even one real estate asset. That kind of risk distribution is only possible when you factor in tokenization. Now, the use cases for it are, very, there's more than 20 use cases within real estate. When you put this in the RWA space, you see it's just a niche. If you go to rwa.xyz today, you will see that real estate is not even a category in the RWA space. So it's that early. And on the other end, we all know that real estate is the largest asset class in the world. If you combine all the other assets together, you don't get to the so-called market cap of real estate. So the opportunity is big. The challenges are big as well. But what we have managed to do is secure tokens that are connected to the economic value of the real estate asset in the land registry in Europe, in a European country. And now we're basically modeling out a commercially viable way of doing this in any jurisdiction. So that security that comes through making a direct real estate investment will be inherently brought to tokenized real estate.
Well, let's touch on the challenges actually. I think it's a good segue into probably what a lot of people have concerns with when it comes to anything going on chain, right? Security, compliance, ensuring that whatever tokenized assets you're involved in have a level of security and compliance and licensing applied to it, so you're interacting safely on chain with a safe regulatory environment. So I think it's a topic. It's a big topic to digest, but I think all three of our guests here, Abhishek, obviously you will know everything about that because we are bringing these things on chain on HAVEN1 and specifically on the security front. I'm sure you can comment, and also Paweł and Denis, being in Europe, obviously you have certain restrictions and certain security measures and licensing that you have to acquire before you can even come up with a business like that. So I would love to hear from all of you guys on some of these challenges that you have come across and how are these challenges addressed. Feel free to jump in.
Yeah, so in terms of the regulations, not the regulation, but the regulations, we see that the regulator wind has changed. Right? Together with Trump appointed as a president, you can like it, you can not like him, but after all, something has moved in there. So that is changing the status quo, and the whole world is moving towards regulations heavily right now. So in the next few years, we will see a lot of fluctuations, and the big regulatory tsunami will come onto the crypto market. It's already here in Europe. So you have MiCA, DORA, DLT pilot regime. So there are at least 3 regulations that are entering the space. So without being regulated, many companies will disappear from the space because that's going to be another requirement for even the retail customers. Like in 2021, everyone was asking, do you have a CertiK or HACEN audit? Is there any audit that has been done on the smart contracts? And most probably in 3 years, every user for the new token that is going to be released will ask, okay, where is your MiCA opinion, or are you regulated? Because people were scammed so much, and we see this, especially this year, that the amount of tokens released last year was level of magnitude bigger than in 2021. So that shows that the risk is high. So that's first thing. And for the businesses like ours, in my opinion, it's perfect because we, with our knowledge and experience on the regulated market, we have advantage over the other players that don't know how to play that game. For example, as a Nomad Fulcrum, we secured a financial license, asset management license in one of our subsidiary companies in Switzerland. We are planning to issue a few more licenses in different regions worldwide. It's not easy, it's tough. You need to have understanding how regulators work, how slow they are to fulfill all the requirements. You need to understand that a regulator can say no for you as a CEO of your own company if they will not like you because of some kind of like past experience or lack of experience, right? So it's not easy to navigate in that space. But if you are capable of or determined enough, or you have good people on board as a team, etc., that is going to be something that will allow companies to scale up, because the institutional capital that came into play in the last few years in the crypto market is right now playing a very important role in the growth of the industry and success or lack of success of protocols and other projects. Because You can have 50,000 users ever deploying 1,000, or you can have one organization that will deploy $1 billion. So that's the difference, right? So playing the game that these organizations understand, which is regulated, because they were too afraid so far to enter the space. That's why regulation came into play to provide a security for big organizations, bank, financial companies, institutions, so they can get into the space safely, more or less, so they can point a finger if someone will scam them and sue him, right? There are no anonymous teams in the regulated environment. So you can like regulation, you can say and hate regulations, but that no one cares. No one cares about your opinion. Nobody gives a shit. What matters is that it's inevitable, it's going to happen. And the question is, if you think pragmatically enough to play the game, or you want to get a sign that regulations are bad, go outside of your building and start protesting and have nothing from that, because it's inevitable, it's going to happen. Too many capital has flown into the space. So I believe the pragmatic approach is much better, but there are ways to navigate in that properly. Yeah, so that would be my approach. And we started as a company, as a greenfield from regulations, because this will allow us not have any unregulated transactions before. Let's imagine that some kind of laws are going to be implemented in the future, and some unregulated transactions happen on the chain, and then the protocol that wants to be regulated needs to explain a lot of different transactions that were happening, or measures or precautions they had, etc. So it's a lot of problems. So we started with 100 transactions that happened using our protocol to be regulated according to the future regulations. We knew what's going to be in the MiCA because that was published years before. So we adjusted our business and all transactions and everything that is happening in it to be compliant as much as possible with the future laws that are going to be similar, more or less, worldwide between different regions, with some details that are going to be different, right? But more or less, they are very, very similar. So that is allowing us today to say that we are fully regulated. We are not afraid of anything, and we can work and collaborate with the largest players without any fear of having SAC issues, whatever, right? So that's our way to do so.
Abhishek, Denis, any comments from you, especially on the security? I'm sure, Abhishek, you've got some.
Yeah, I mean, I can come in. The Paweł has sort of talked quite a bit about the security piece, and I'll just sort of plug in that this is where HAVEN1's infrastructure comes really, really useful compared to other chains out there, because really every single user has not only done a KYC before being allowed to onboard. The product itself is very composable. So not only are these the regulations in the space complex, they're also different depending upon country to country. So the way we've designed our identity verification system is that if a user has done a basic KYC and then we need to collect additional details, a builder who's built that application where they're onboarding users for which they need to collect additional details, they can very easily request for that, and then our system will detect that this is a missing document and would naturally prompt the user to complete that higher level of verification. So having built KYC verification systems at Binance before, having doing this in a composable way, I think is going to be very useful for RWA projects. But the other angle I want to talk about, which I think is the second challenge in the space, apart from the regulation, is also I think the yields on RW assets are great if you think about TradeFi money, but if you think about sort of native crypto money where people are used to now getting 15-20% on their stables, people are used to getting even more on volatile assets like ETH, ETH USDC if they want to take a directional risk. If they don't want to take a directional risk, maybe in the range of like again 5 to 10%. Bitcoin also potentially in the same range, and then you have potentially an asset which is obviously, because it is rooted in a real physical asset price elsewhere, the assets are not insanely volatile. So really, if you're holding that asset, the main reason for holding is to yes, you have some price appreciation that's happening year on year, but the main reason you're holding is to generate some sort of a return, and those returns are um, are are not exciting enough for a crypto native users. And this is where I think the next evolution of RWA on blockchain rails is going to happen, where what you'll start to see is that there's going to be a lot of composability products that will be built, where on HAVEN1, as an example, uh, we are building a lending protocol where if you're holding a real estate collateral, you can provide that real estate collateral and mint stable coins against it. Now, these stable coins, you can sort of choose to invest in whatever you want to invest in, be it meme coins or be it like other assets. Similarly, you can start to get some additional return. So holding the real estate token is giving you supposedly some sort of rent. But if you are lending in a lending protocol, you're able to generate additional return on top of it. And I think these sort of stacked layers of return will make these assets even more useful, even more exciting for crypto native audiences. And that's something that I'm quite excited about. And we're looking to build in HAVEN1 and bring it to our community.
You've touched on quite a interesting thing there, which is kind of the topic of what's next for real world assets, RWAs. Before we move on to that, I do want to give you opportunity, Dennis, as well, to weigh in on the topic of security regulation, if you've got any insights for us as well, and then we'll move on to what's next for RWAs.
Yeah, well, regulation is kind of a big topic. I remember when we started exploring the real estate organization space, there was not much you could look into, right? Today we have MiCA in Europe, and I think that's great because really, you have a regulation in place that can help you scale, right? And you can talk to institutional investors, and talk about bigger tickets and so forth. So it's not an experiment anymore, let's say. However, one thing we all need to understand is AML regulation is in place everywhere. So the KYC part is a very important step before you can onboard any investor, and that kind of goes a bit against what people in crypto are used to, right? So that's something that is coming heavily into the space. And I think, currently the way how it's being managed is through decentralized exchanges entities, but in time that's going to be imposed, maybe even on a protocol level. Who knows? Let's see where it goes. Another point I'd like to make is when you tokenize RWAs, there's another regulation, at least in Europe and in the US, you have securities regulations, right? And in Europe, the equivalent is actually MiFID II, which kind of protects or oversees the regulation of issuance of securities, whether that's debt securities or equities. And a lot of times people think, okay, now there's MiCA, so if I tokenize shares of an SPV that owns a certain asset, now I'm regulated under MiCA. That's not true. You're going to be regulated under MiFID II, because what we've done, you've created a token that basically represents shares in a company that owns a specific asset. And that approach, as we've learned, is not the approach that will be successful. So tokenized securities, it is a space, but it's a very heavily regulated space, and MiCA doesn't solve much for it. On the other end, you have tokens that might derive their economic rights from real world assets, but they're not directly categorized as tokenized securities. They're tokens that might have similarities to a security, but they're not strictly categorized as a security. So there's this distinction that needs to be made. And for those tokens, it's interesting that MiCA can do something. Currently, MiCA is kind of regulating mainly stablecoins. So that's the big topic that's usually brought to the media. Then you have so-called asset reference tokens, which kind of directly tied to a specific basket of assets. And then you have the other the other category, the third category, which is kind of really vague and regulates anything and everything from meme coins to utility tokens and so forth. And so it's important to look this holistically and see, does the tokens that your protocol or platform issue, where are they positioned? And that's kind of a burden as well for legal teams to understand. So they need to understand deeply all those regulations and then be able to analyze a transaction from its inception till its kind of end customer. And that's why we're working with one of the biggest European law firms, CMS, which has offices across Europe and as well worldwide. And we're spending quite a lot to get certainty, so that you can then lay over the certainty to the end consumer, the user, who might be the investor or a B2B partner, if you will.
Great, and I think obviously I want to be conscious of kind of what's next for RWAs, and feel free to jump in on this, Abhishek, Paweł, or Denis. Specifically, how do you see RWAs evolving? New asset classes, new use cases for RWAs, and kind of what the future plans are for you as well, Blocksquare and Nomad Fulcrum.
Okay, so in our case, we have a lot of different plans. So besides collaboration with you guys, HAVEN1, we are releasing the platform, the main platform of ours that will allow people to deploy capital and have exposure onto the quant strategies that are operating on traditional market with different risk scenarios like low, medium, high within the next few weeks. So that's the first. Then we want to launch a product that will allow us to release mutual funds. So we are already closing the partnerships. One is closed with Ondo. We are closing partnership with Open Eden and a couple of other players to release mutual funds that will allow users to have blended yield from different financial products and different financial strategies with different organizations from traditional crypto market, this and that. Then the third type of product that we want to release is liquid staking. So we want to provide users and assets that are backed by RWAs and are tradable on the secondary market. And the value of these assets appreciates its value over the time by the profits generated by our tokenized hedge fund. So you deploy $10,000, we generate, let's say, 20,000 over the year. So these tokens grew by 20% over the year. So these tokens are worth 12,000 after a year. And that way we can provide a new asset classes that can be combined together with over collateralized protocols, providing more stability, less liquidations, and different asset class that is not pegged to the current situation on the market and is not, a hostage of what is happening on the market. Usually you have in over collateralized protocols, you borrow Bitcoin, provide Ethereum go down, Ethereum go down, and then every 3 months we see these big headlines, massive liquidations in crypto, billions lost, right? So if you can use something that is not pegged to the Bitcoin price and the state of the market, that is another thing. And we want to focus more on collaboration with other players like other DeFi protocols, other RWAs, than on competing to each other, because there is enough capital in the market, both traditional and crypto, to accumulate that capital and provide different products with different price characteristics, different risk awareness, etc. Bringing these products together in a package and providing to the end user and providing some kind of value than competing for every penny. And I believe that's going to be the important trend, the combination of different like RWA products. And in our case, we are going exactly into that direction, and mutual funds product is going to be one of the first proofs of that idea.
Amazing. Sounds like you guys are super, super busy. And that's good to hear that you guys are moving quite quickly as well.
Thank you.
And Abhishek, obviously you already touched on it, the big plans. I'm not going to bore people on the call. I'm sure they hear a lot about, the road to mainnet. But you want to touch on anything here?
I think so. For us, HAVEN1, the goal is to launch obviously mainnet towards by the end of Feb. along with the token. Then the next thing that's going to happen on RWA protocol. So we are working with several protocols to bring their assets on HAVEN1. We're working with liquidity partners to make sure the liquidity is available, institutional liquidity, so that these assets have demand on HAVEN1 on day one. And then obviously we need to build, like I said earlier, we need to build sort of Legos which can fit on top of each other and possibly can generate multiple layers of yield, which will be then, we think, quite interesting for retail users as well. So that's what's going on in HAVEN1 land, yeah, on RWS.
Thanks, Abhishek. And we did mention that there is a giveaway component in this AMA. So 5 questions were picked to win $20 each in USDT. The 5 questions that have been picked out can kind of have been already answered by the conversations that we've had on this call. But I do want to mention some of these people so they know, their questions were in the mix. Adam Azango 10, you asked about significant challenges and the opportunities of bringing RWAs into blockchain. I think we've covered that quite at length. And forgive me if I'm pronouncing these handles wrong, but I see Zurich XD asking about any developments, advancements on the horizon that could help to drive widespread adoption of RWA. Does anyone want to take this question, or you guys think we've covered quite a lot on this one as well? This one is on development and advancements that will create widespread adoption of RWAs.
I can jump in.
Yeah, absolutely. Of course.
The mass adoption for RWA is already started. You can see this by amount of capital that is floating in only for like few protocols like Ondo, Open Eden, some other traditional like BlackRock, Build Fund, etc. So this is already happening. It's like some of these protocols are not easily accessible to the retail customer. For example, today you cannot have direct exposure onto BlackRock Build Fund, but you can have it through Ondo, because if you will deploy capital to Ondo, the ticket size is much smaller, because to get into the BlackRock fund, the minimum ticket is 5 million, as far as I remember. But to get into that's the same fund, and some different layers are going to appear in here, and it's already starting. A lot of capital is floating in, a lot of users are looking for some stable yield, and I believe we are in that space right now. BlackRock is also the CEO, but Larry Fink of BlackRock just recently in Davos said that he wants to tokenize everything, and he wants SAC, US SAC, to approve the bill that will allow to tokenize everything. So as you can see, all the major players, JP Morgan, BlackRock, everyone, Citibank, are jumping into the space to prepare the market, the capital markets, for the times where we have tradability 24/7, fractionalization, etc. Because for them, it means that they will have more transaction fees. For us, it means that we can trade anytime, anywhere we want on the asset without intermediates, so lower fees as well. So I believe the thing that needs to happen to push it forward are the builders. So people like us who have ideas, who build, or as the person that asked that question, if you have any kind of idea, the moment to start is now. You have very good political tailwinds. You have the green light from the politicians about that. You have the market growing, the capital floating in, the major institution jumping into the space. So everything fits to start now. And the people, and the only thing from the technological point of view that is required are infrastructure providers like HAVEN that will allow us easier to tokenize stuff, and builders that where only imagination is the limitation of what we want to tokenize. And maybe in the future you could have access to the tokenizing everything, and you can put even your car that you are driving as an Uber driver every day after the work for 2 hours, and you can tokenize the yield from that. So you can do a lot of crazy stuff. So in my opinion, we are here, infrastructure providers are important, and builders are even more important, because builders will provide to infrastructure users, and users volumes, and volumes business.
Absolutely, and it's good to see more and more builders are joining the space, and Yeah, that will absolutely be the key to getting this getting RWAs widespread. There's a couple of other questions that have come in which kind of been answered, but I'll obviously mention them as well. So W Krishna 18, ensuring security, transparency, regulatory compliance in tokenization on chain. I think we've covered that quite at length. At Basic Zeal also asked, how do you envision RWA tokenization changing the traditional finance landscape? What benefits it could bring to investors? Which again, I think we've covered quite a lot. There's this last one here, maybe for you, Abhishek. So Noodle Fuzz asks, which sector of RWA presents the most compelling opportunity for Haven One integration and growth for Haven One?
I mean, there's when you look at firstly, when you look at the size of the RWA market, we're roughly growing about 100% every year. We doubled from about $5 billion to about $10 billion. This is not counting for stablecoins, from 23 to 24, and then we doubled from 10 to about 20 in the beginning of 25. So at this rate, we and this sort of trend is holding for a few years, and if this trend holds, which it's very likely to because of the favorable regulation that's coming in, then we'll potentially be about $1 trillion on chain RWA assets on chain in the next 4 to 5 years. Now, if you look at the segments which have been doing extremely well, obviously a lot of treasuries are coming in. The benefits that treasuries have provided is essentially stable coins is a fairly common big use case already, and we've got more than $200 billion in stable coin on chain right now. And what if you can sort of merge or build a stable coin which gives you a yield? So there's a lot of composability that's already built in, and so the treasury debt obviously is moving in quite quickly on chain. Private credit is very interesting. The amount of loans SMEs have access to, especially in emerging markets, and the interest rates at which they have access to is insane. So potentially of being able to provide a 15 to 20% to SMEs with basic due diligence, I think is pretty interesting. And that's a space which is probably 4x in the last sort of 2 years or so. So yeah, I think it's Haven1 built to support all varieties of RWA, and we are certainly working with builders across the space. We've obviously got Denis and team the building real estate on chain. We've got a team that's building diamonds. We've obviously got teams that are building treasury bills on chain. So yeah, we've got a host of different protocols bringing unique assets. I've also had calls with people to bring in non-liquid Web2 companies like Anthropic and OpenAI, etc. Those investments on chain as well. So yeah, I think the space is evolving quite quickly, and Haven1's built to really support everyone. But if you were to ask me, what do I see growing quite quickly from here? I see private credit certainly leapfrogging a lot of different categories over the next year or two.
Awesome. And that's kind of concludes most of the question I've had. So those 5 people that I've mentioned will get in touch with you and arrange the price for the question being chosen. I do want to give you guys an opportunity to kind of give any closing remarks on what you guys are up to, what people should be looking out for, and how to get involved with you. Obviously, everyone in here, please do follow our friends over at Nomad Fulcrum and also at Blocksquare_IO. Both Paweł and Denis, I've got their profiles here as well for you guys to follow to see what's coming up for them. I'm sure it's going to be a busy year for everybody on this call. So please do follow our friends over at Nomad Fulcrum and Blocksquare to keep an eye on what they're up to. But Denis, anything from your side before we end? Anything that people should be aware of? Any plans you guys have?
Well, first of all, thanks for organizing the space. It was great to be part of it. I hope I was able to add some value from my end. Those who follow Blocksquare, they kind of know what we're up to. There's quite a lineup of pilots that we'll be doing to kind of show the market the notarized tokenization framework. First one's going to be on a property in Belgium, and then following with other jurisdictions in Europe. We're working as well on making this available in the US and in Australia, and the UK. What else? One of the most exciting things I think bringing or coming this year for us is Ocean Point becoming a liquidity engine for our system or our infrastructure. And I think that kind of development has been already kicked off at the beginning of this year with a big chunk of development work already done. And now kind of we're going in the final testing and smart contract audit stages. And there's going to be a white paper highlighting or outlining the full thing published soon. Anyone interested in seeing how things work under the hood is welcome to follow us.
Amazing.
I
Any
want to quick,
other? Yeah, go ahead, Abhishek.
yeah, I want to quickly plug in our token sale that's ongoing on Tokensoft right now. So if you go to haven1.tokensoft.io, if you're already signed up to Haven1, you would have received an email as well. And this is probably one of your last chances to be able to invest on terms pre a TG. Again, this is sort of do your own research. This is not a solicitation of investment, but I wanted to let you know this is ongoing so that in case you're not aware, you can sort of check it out. Um, but yeah, this is probably one of the last sort of opportunities you'll have before we do the TG towards the end of
Yes, and that's posted and it is pinned to the top of the Haven1 X account. So feel free to check out our account and see it there as well. Any other closing remarks, Pavel?
So yeah, the closing remarks that I have is that I see that we are being listened by around 90 people, over 90 people. So I believe there are people that are still considering if they should get into the space, build something, have some ideas. And as I said before, I would like just to highlight it very much. Right now is the best moment ever. You had a couple of good moments in the past, but right now everything fits, like regulations, the green light from politicians, everything fits very well to get into the market and build something remarkable, because a lot of things that have been were not possible in the past are possible now, because all the changes that are happening, of the trust of the society, of the trust of institutions, of the institutional capital that is getting into the space. So you have much higher chances of success of the idea of your business that you have in your head right now than ever. So if you are thinking about anything, build now.
Absolutely. If whether you're an investor, builder, or aspiring business entrepreneur, I think you're right. This is the perfect time to get involved. Well, thanks everyone for joining. It was a really nice chat. Appreciate you guys sticking through with us for the hour, and thank you so much, Pavel, and thank you so much, Dennis, for joining us on this AMA. And obviously, another thank you, Abhishek. Happy to see you on another Haven1 AMA. So, thanks everyone for joining, and we'll see you next time. Thanks, guys.